Oh boy, the stock market is sky high. Are you chasing a stock? Is that a good idea? Is that how long-term investors building multi-generational wealth think or not? I don't think so. At Checki Financial, we evaluate clients' objectives. In other words, what's your time frame, what's your risk tolerance, what's your experience has been, and the like. Right now, I'm in Estes Park, Colorado, surrounded by mountains in a parking lot, and testing how outdoor recordings actually work. But let's get back to a topic. My darling wife, Susie, likes to watch Fox Business Network, so do I. And one stock comes up again and again with her that she's taught her eye. It's called Eli Lilly, symbol LLY. Now, I'm not going to suggest buying Eli Lilly or not. I am a registered investment advisor, plus a certified financial planner, a certified public accountant. And yes, we do recommend investments for clients and actually manage investments for clients, plus manage investments for ourselves and our household. But let's discuss when a stock is really popular and it gets really expensive. What should you do? If the fundamentals are there, what the heck does that mean, fundamentals? If, in fact, there's some earnings growth potential, this is exactly how value is transmitted into stocks, translation. If stock costs this much in terms of its earnings per share, forward earnings, and the like, and you think future earnings would be more like up here, say a 10, 15, 20% growth, you might hope and pray that this stock price could increase. Well, if it was that easy, kids, all you had to do is guess how much money an individual investment or company was going to earn in terms of earnings per share. Wouldn't life be simple? I have 2 crystal balls at home. Neither one of them tell me much of anything other than their pretty little glass balls. Yes, some people are finishing up this part of their vacation from Estes Park and going someplace else. Good for them. In my case, I have a podcast coming up a little bit later in the morning, which we'll edit, and then we'll go ahead and post to our YouTube channel, Checki Financial. Look forward to seeing you there and seeing if you wouldn't find it interesting enough to subscribe. Let's get back to, gee willikers, how on earth do you pick an investment? If I'm looking for income, that's one criterion in terms of if I want some ordinary income generated from dividends, that's one consideration. If in fact, instead, I would like potential growth. What does that mean? Let's say I'm looking for a stock that has the potential to go up in value, which kind of sort of is what long-term investors like to do. And why is that? If I buy a stock here, let's just say it's $100,000 to use a nice round number in terms of a given investment. And that's proper in terms of allocation with all your other investments, not just, hey, I put all my money in one. We're not suggesting putting all your eggs in one basket, no matter how closely you watch that basket. There's some investors who read hundreds of pages of reports on a daily basis and have a zillion years of evaluation of companies, are very big on buying just 2 or 3 companies for their entire portfolio. And good for them. They think that people who diversify are ill-advised. We're in Estes Park, Colorado. What that means in English is lots of curves in the road. This happens to be a straight. But as soon as you leave town, you go up into the Rocky Mountain National Park. Whoops, it's all over the place. And you say, why are you talking about that sort of thing? The whole point of view of having investments over time is to have money to actually be able to do stuff as opposed to just count your money every day. At least I hope that's the objective. And I do like to travel. I've also built a beautiful home in terms of the environment of the home, gardens around the home, what have you. And we're able to buy that pretty much because we had saved, enjoyed compounding over time, and had invested in a home years and years and years and years ago. That home went up in value after a long period of time. And we happen to have a wonderful neighbor, Presbyterian Village North, who was ready to buy the house as soon as I was ready to sell it. And I say as soon as I was ready to sell it because I've been in that house since about 1980. Left for a couple of years to move to Richardson, bought a house there for a period of time, which turned out to be a disaster in terms of real estate investment. Lost money on that particular home despite having lived there for 13 years. So not all investments, whether it's real estate or stock or bonds, goes up in value. Then you have to learn what and to cut your losses and go on down the road or just stick it out. And that's a matter of evaluation. But let's get back to a stock chasing problem. Watch TV, mention a stock, like what they're doing. In this case, it's a drug company which helps people mitigate, treat, maybe even prevent certain diseases, one of which is obesity, another of which is diabetes. And if you can avoid those two, that is a mighty fine thing to avoid, all kidding aside. Susie is a big fan of staying a certain size. So am I. And, any number of people who have had to use whatever that drug is called to get to be a smaller size than they used to be. And it's also helped some of them with diabetes, heart issues, and the like. And what a blessing that is to people. And that stock has really gone up value. Evaluated it. I don't think it's worth a whole lot more than it is right this second, maybe a 5% or so increase over time. But there's another form of investment you can look at, and we recommend commonly, called exchange traded funds. Exchange traded funds used to just be pick an index and hope for the best, which was not any good from my point of view. And why is that? One, it takes forever. Two, you have to look at how the exchange traded fund actually allocates its resources within those indexes or indices, whether it's capital weighted or just average weighted in terms of pick one issue rather than buy a lot more because it's more expensive, which makes no sense to me whatsoever. Which gets back to chasing a stock, which is kind of overvalued. How do you do that? If you're emotionally attached to a particular investment, I highly recommend taking a deep breath, giving it some thought, evaluating it. By all means, use artificial intelligence if that's something you enjoy doing. And while you're doing that, have the artificial intelligence be checked by other artificial intelligence and other information sources, and do your own research and make your own judgments. And if you don't have the patience and persistence to do that, I highly recommend hiring people like Checki Financial, if not Checki Financial, which would be my first choice for you. Hire some folks who are not emotionally attached to the particular company. And certainly are analysts who, make no mistake about it, specialize in particular industries. And they've spent their whole life, whether it's in cement or drugs or horticulture or farming or certain subsets of industry, whether it's automotive or military or armaments or airplanes or even airlines. So there are people that specialize. We have a tendency at Checki Financial to reach out to those people and see, what do you like these days? And why do you like that? And please evaluate that for us and let us know why you're so enthusiastic about that. And let us know if you can do that objectively. In other words, no one has paid you to be that enthusiastic about a stock. So when something gets expensive, it doesn't mean it's a bad deal if you feel like, and evidence seems to corroborate and agree with the fact that that will appreciate, go up in value. If that seems a little foggy, I might want to do some more research. Just emotionally, I just want to buy it anywhere. Just buy a little bit of it, not a whole bunch of it, so as not to distort your financial future. This is John Checki, co-founder of Checki Financial, wishing you a happy, healthy, and joyous day.